All right, let's talk about D-Wave Quantum, ticker QBTS. This thing has been on an absolute rocket ship lately. But the big question is it about to run out of fuel? We're going to dive into the technicals, break down what's behind this incredible surge, and see what the charts are telling us might happen next. And to really put this into perspective, just look at this timeline. I mean, we are not talking about some slow, steady climb here. No way. In just a matter of weeks, QBTS more than doubled. It blasted from around $15 to a peak over $33. I mean, by any definition, that is one powerful, aggressive uptrend.
Okay, but here's the twist. This is where it gets interesting. After that insane run, the official technical signal is neutral with low confidence. Kind of feels contradictory, right? You've got this white-hot stock, and the analysis gives it this, lukewarm, uncertain rating. So that's the puzzle we need to solve today.
So what's with the disconnect? To figure it out, we've got to look at the evidence from both sides. Let's start with the bull case. Let's look at all the indicators that are screaming this uptrend is legit.
All right, first up, the bull case. What are the signals telling us that this incredible run has some solid footing?
Okay, first off, just look at how the price is soaring above its key moving averages. Think of these averages, like the 5-day, the 200-day, as a kind of gravitational center for the stock's price. And when the current price is flying this far above all of them, well, that's a crystal clear sign of some really intense accelerating bullish momentum. And this is crucial. This massive price surge isn't happening in a vacuum on low volume. Nope, it is backed by some serious trading activity. You got to think of volume as the fuel for a price move, right? So high volume like this tells us there's real conviction here, that there's broad participation from traders who are actively buying in. And this number here, this is the on-balance volume, or OBV. It's basically a running tally. On days the stock goes up, you add the volume. On days it goes down, you subtract it. So when you see a massively positive number like this, we're talking over $2 billion, it tells a really clear story. For a long time now, the buying pressure has just been totally overwhelming the selling pressure. So yeah, the bull case looks pretty darn strong. But that's not the whole story.
Okay, now for the other side of the coin, the red flags. These are the warning signs that explain why, despite all that incredible strength we just saw, the signal is still just neutral.
The key concept we really need to get our heads around here is the term overbought. Now, this doesn't mean the stock is bad or the company is in trouble, not at all. It just means it's moved up really, really fast and it might be running out of steam. Kind of like a sprinter who just finished a race and needs to catch their breath before they can run again.
And this right here is the heart of the cautionary tale. It's not just one indicator, it's a whole chorus of them, all singing the same tune. You've got momentum indicators like the RSI and stochastic deep in overbought territory. The Williams %R, that's screaming extremely overbought. Even the Bollinger Bands, which track volatility, show the price is stretched way out to its upper limit. I mean, basically, all these different tools are pointing to the exact same conclusion. The stock has simply gone too far, too fast.
All those indicators can feel a little abstract. So let's make this concrete. Let's put a hard number on it. Just how far has the price strayed from its own statistical trend line?
So this number, $23.08, comes from what's called a linear regression model. All that is really is a fancy tool that calculates the line of best fit for where the stock has been trading recently. And based on that trend, the price should, statistically speaking, be right around here, at $23.
And here's where you really see the scale of the disconnect. The predicted price is just over $23, but the actual price is almost $33. That is a whopping 42% deviation above its own trend line. The stock hasn't just been rising, it's gone almost vertical, totally outpacing its own statistical momentum. And that is the single biggest reason for that neutral signal we started with.
Okay, so we have this classic tug of war, right? On one side, you've got this powerful momentum. On the other, all these overbought signals. This brings us to the price battlefield. What are the key levels that traders are watching like a hawk right now?
So these are the key lines in the sand. Let's start with the upside. You've got resistance. Think of it as a ceiling, right around that recent high of $33.28. The bulls absolutely have to break through that to keep this party going. Now on the downside, you've got your first support level, the floor, at $28.76. If the price breaks below that floor, that's going to be the first major sign that this momentum is finally taking a breather.
All right, so we've seen the bull case, we've seen the red flags. Let's bring it all together now and look at the two most likely scenarios going forward.
Really, the path forward is going to be defined by those key levels we just talked about. So in the bullish scenario, QBTS just smashes right through that 33.28 ceiling. That would signal that the buyers have basically shrugged off all these warnings and are still firmly in control. On the other hand, in the bearish scenario, the price falls through that 28.76 floor. Now, that doesn't necessarily mean a crash is coming, but it's a very strong signal that the stock needs to cool its jets with a pullback or maybe just trade sideways for a while.
And this brings us right back full circle to that initial signal. That low confidence part of the rating, that's really the main takeaway from the analyst here. Because you have this major conflict between a super strong trend and all these overbought warnings, the most prudent move is probably just to wait for more clarity. You wait for the price to tell you what it's going to do, either break that resistance ceiling or fall through that support floor.
And just like that, the paradox is resolved. The stock is in a powerful uptrend, no doubt about it. But in the short term, it has just climbed too high, too fast. That neutral signal isn't some verdict on the company's future. It's a warning about the stock's present exhaustion. It's suggesting that a pause isn't just likely, it's probably healthy and even necessary for the long-term health of this trend.
So that leaves us with the final, crucial question, doesn't it? Is QBTS simply catching its breath before the next leg of the rocket launch? Or has it flown a little too close to the sun? Well, the answer to that is going to be decided right there on that battlefield, between support and resistance.